Good morning, everyone, and welcome to today's Q3 2021 market update from CBRE Cambodia. My name's James Hodge. I'm the Managing Director here at CBRE Cambodia. I'm pleased to welcome my colleagues on this webinar today, Lawrence Lennon, Associate Director and Head of our Professional Services team, and Kinkessa Kim, Senior Manager of Research and Consulting. So thank you for joining us. There's a reasonable amount to get through today, so I won't delay things too long. But firstly, just wanted to thank my colleagues for the hard work putting this deck together. Many of them were awake late into the evening last night, just tidying up those last minute figures that came in. So their efforts much appreciated for this. As normal with a CBRE webinar, we have a Q&A section at the end today. And as normal with Zoom, there is a Q&A box at the bottom of the screen. So throughout the webinar, you are welcome to ask us any questions, and Kessa, Lawrence, and I will try and get to those answers at the end of today's webinar. We'll be kicking off with me giving you a quick overview of what's happened over the quarter, and then Kessa and Lawrence will take over. Lawrence will be looking at the commercial sectors, so office and retail, and Kessa will be looking at condominium and landed property. And today we are trying to give you some context of the changes that we are seeing in the market, because the pandemic's impacts are certainly becoming more transparent in how they are leading changes for the Phnom Penh market. So we think it's a good time to sit and look at where the long-term trends are heading, particularly in the context of some of the structural challenges that we're facing here in the Cambodian market. So I'm going to kick off by giving you a quick overview of what's happened in Q3. Overall, we have continued to see a decline in the headline figures coming out of the real estate industry this quarter. And the only figure which has shown a positive increment in our key indicators is the total number of COVID cases. Unfortunately, as we would all expect, it's not going to go down. What has been quite interesting is the continued disruption that we're seeing to FDI inflows and approved investment into construction. So certainly this year has shown a continued decline, and this is particularly acute when we start to think about the number of projects which have been approved since the start of the year. So well down now on what we were seeing both in 2020 and of course in 2019. We hope that the easing of restrictions, which we're expecting to start to see over the fourth quarter, will help to give us a brighter perception and picture for 2022. However, there obviously remains a great deal of risk around the current situation, as well as the efficacy of the vaccine rollout. In terms of the news, it's been quite a mixed quarter. We've had some quite positive news in regards to Cambodia's new investment law being moved forward through the various legal mechanisms. And we've also seen progress made with regards to the bilateral trade agreements, including RCEP and also the FTA with China. However, there have been plenty of external headwinds and possible issues arise for the market, not least here we're looking at the potential contagion impact of the difficulties facing China's real estate markets, as highlighted by the situation that Everground finds itself in, as well as issues related to geopolitics and the US's response to how they see the Cambodian political situation. And we continue to see concerns for the Phnom Penh real estate market with price drops compared to our neighboring cities and still a dearth of foreign buyers active in the market, all stories which have been picked up by the press. But also quite interesting over the last quarter, there is certainly more of a drive towards talking about green technology and sustainability as it relates to Cambodian real estate and Cambodian infrastructure. So here we can see a good article from Nikkei about the issues related to the expansion of coal-fired power stations compared to possible alternative methods of producing electricity. In terms of COVID's impact, the last quarter has been more stable, obviously led by the fact that the vaccine rollout that we've seen in Cambodia has been so efficient. We haven't really seen any major adjustments in mobility. What we have seen is a general trend back towards the baseline, particularly for residential and also for workplace, and to a certain extent to retail. However, there have been blips, and I have no doubt there will continue to be some. Please ignore the impact of the public holidays on the mobility tracker. They do have dramatic impacts. When I looked at the start of this week for Cambodia's mobility as a whole, the Pachumbin holiday was having a very dramatic impact on workplace, dragging it down to -77, which is very strong response. But we're all, I think, suitably impressed by the results of the vaccination rollout, which is approaching developed nation status in terms of how well it has been rolled out and how far and deep it has gone. Phnom Penh, as of yesterday, has started to issue booster doses to its citizens, and we have started to see quite a steep decline in COVID cases, down from around 800 a day to below 300, usually in the order of 220 to 250. However, how closely that is actually tracking the on-the-ground figures and is not an attempt to help to bolster confidence amongst the local population is questionable. But when we're in a circumstance where we're nearly at a point that we have herd immunity through vaccination, it is probably more helpful to be pushing confidence in and amongst the local population in order to get the economy ticking along a little bit quicker, in our opinion. In terms of infrastructure, we've certainly seen no slowdown in terms of the progress being made. The Moradok Teko Stadium completed on Choi Chang Va well in advance of the 2023 Southeast Asia Games. No news stories as we would typically hear around a sporting event of all the venues are going to be delayed. Nope, we're 2 years ahead of schedule. So a very impressive performance by the Chinese contractors for that project. The new Phnom Penh International Airport is certainly taking shape, and a very impressive looking piece of engineering. And we are seeing a lot of progress being made with the various road infrastructure upgrades which are being made, not least the Phnom Penh to Sihanoukville Expressway, which is now 65% complete and due to be open by this time next year. I'm sure we all look forward to traveling on that in the not too distant future. It looks like a very impressive bit of kit, and will certainly help to open up more geographies. And that's something that we've started to see impacting different markets, particularly landed property, and Kessa will touch on that later, but also for inquiries and interest in industrial and logistics here in Cambodia. So thank you very much. That was just a quick overview. I'll now hand over to Lawrence, who will run you through the commercial sectors, is starting with the office market.
Thank you very much for the kind introduction, James. Good morning, everyone. Thank you very much for joining. My name is Lawrence Lennon, and I will be taking you through the commercial segments of Cambodia's real estate market. I'll be touching on the office market first and then moving on to the retail segment. So the quarter witnessed no new launches. However, we did witness 7 completions taking place in the market. This is approximately 61,500 square meters of net leasable area. Of this net leasable area, approximately 70% came from a single project, a strata title project located in Chakmaron district, which is a grade A project, GIA Tower. It's performing fairly well and attracting some strong tenants, which is quite interesting to observe. Other new completions in the market include Spring Plaza and TK Olive. In terms of trends in the market, fundamentally, we're witnessing the same underlying changes that we witnessed earlier on in the year, that were mentioned in the year half webinar earlier. Fundamentally, we're witnessing supply increasing, and that's fundamentally changing things quite significantly. As supply is increasing, it's impacting occupancy rate. You'll notice the centrally owned occupancy has dipped negative 4.6% quarter on quarter, down to 68.1% for centrally owned offices. As of Q3 2021, we have witnessed around 786,000 square meters of net leasable area completed. By the year end, we're expecting this to increase to approximately 790,000 square meters of net leasable area. In terms of centrally owned supply, we were anticipating around 60,720 square meters entering the market. As of Q3, 94% of this supply has entered the market. As for the strata title supply of 2021, 82,465 square meters of this has been completed as projected, which is fundamentally causing a lot of pressure for most landlords who are operating in the market. It's important for all players in the market to understand that COVID-19 has acted as a catalyst, but is not necessarily the cause of these changes. And we're witnessing significant impacts because of supply entering. These impacts are underlying and driven by the supply, and we can see that average quoting rents are shifting downward. For grade A offices and grade B centrally grade B in the CBD, things are fairly stable. And this is potentially due to the fact there's a very low supply of grade A office space in the market. And the grade B that is well located is somewhat insulated from these changes. However, if you look at the other subsegments, we witness movement in the downward direction of rental rates, quoted average rental rates fundamentally. So if we look at grade B non-CBD, there's been a downward shift of 2.8%. In grade C, CBD, there is a downward movement of 1.9%. And for grade C non-CBD, there is a downward movement of 2%. And fundamentally, these trends are going to continue as office supply continues to rise. As competition increases, as is set to happen across all grades and locations, some buildings may become economically obsolescent and may be considered for redevelopment, repositioning, or repurposing. Fundamentally, as landlords enter this stage of the market cycle, it's extremely important that they hold on to their tenants at all costs. This is going to be a very challenging period, and it's important for landlords to understand exactly what their tenants are looking for. It's important that they are flexible when it comes to rental rates, and consider different ways in which they can retain and attract new tenants. So this may be through the provision of different incentives and finding ways to differentiate themselves in the market. This may be considering things like fitting out their spaces for tenants before they move in, providing parking, which is extremely unusual in the city center, and increasing provision of amenities such as showers, auditoriums, gyms, and canteens. This isn't only important from the perspective of a landlord, but it would also be highly beneficial to any occupiers who are looking to retain staff. So it's a win-win situation. As the market evolves, it's important to consider there are two sides to every coin. So there will certainly be challenges from the landlord's perspective, but overall, what we're hopeful for and what we're excited about is the changing quality to value proposition that's taking place in the market. This means that as stock increases and quality improves, Phnom Penh becomes a more and more attractive market for large occupiers. So we're quite excited to see how this may change and attract international players into the market and make Phnom Penh a more attractive environment to operate in. Moving into retail. The quarter saw 1 new launch and 3 completions, these being the Commune, SCG Design Village, and MC Park. Overall, the dynamics of the retail market are somewhat reflective of the office market. As supply is increasing, we're seeing the same sort of pressures unfolding. You can see in Q3, we had 376,000 square meters of net leasable area entering the market. As this supply is slowly increasing, we're witnessing pressure, a downward pressure on occupancy rates. Quarter on quarter, we saw a downward shift of negative 3.8%, bringing the average retail supply to 67.7%. The supply is very much dominated by shopping mall supply and community mall supply in terms of overall market supply. In terms of new retail completions by type, as mentioned, 87% of 2021 supply came in the form of community malls and 13% came in the form of retail podiums. As for the overall supply progress of 2021, we forecast 147,000 square meters of net leasable area entering the market. Of that supply that we forecast, 53% has entered. As the supply increases, as we would have anticipated, there's been quite a significant downward pressure on average quoting rental rates. So in Q3, as of Q3 2021, we saw a downward shift in prime shopping mall rental rates, a significant shift of negative 9% in prime retail podium, and a decrease in prime high street. Community malls seem to be holding out, and that's potentially due to the fact that they have a better format or better design. Maybe they have adequate parking, and this is what's driving them as being more supportive of occupiers, or at least stronger in terms of this changing dynamic in the market. It's very much important to really pick out why prime retail podiums may be experiencing this downward pressure, and it likely comes down to that format that I just mentioned as to why condominium malls have been quite strong. This means things like adequate parking that allows tenants to support potential traffic coming to the mall, but it may also come down to things like the tenant mix within the project, and this not necessarily matching what's required. It might also come down to the fact that certain developments are providing too much retail podium. Generally speaking, 1 to 2 floors is adequate. Anything higher than that is generally not workable, and that's the case throughout Southeast Asia. One positive part of the retail market is certainly the brand movement. And this may be reflected in the fact that as retail supply increases, it becomes a much more affordable and much more exciting segment to operate in. We saw a number of new entries coming into the market. We saw Pizza 4Ps coming over from Vietnam, entering the market in Q3. We saw Pizza Hut, 7-Eleven, and many Big C. What's interesting to see is all of the segment is dominated by F&B movement, whether it's the F&B players or whether it's convenience stores. In terms of brand expansions, we also saw quite a significant jump in the quarter. We saw 13 expansions taking place, once again, very much dominated by F&B. And once again, I think this sort of demonstrates that there is some very interesting things going on in the market, and retailers are really understanding that there's a viable element to this market as long as you get the price point right, and as long as you understand that the Cambodian market is looking for interesting experiences and F&B opportunities to take part in. In terms of the changing market and the challenges that landlords may be facing, we expect retail podiums to continue to struggle. It's exciting to see convenience stores are leading expansion and trying to capture market share. We're seeing foreign players entering the market and understanding that there is a pie to take part in, or an exciting change taking place as Cambodia's middle class grows. And then also it's interesting to see tenants are taking advantage of rent corrections in the market, looking for good deals, looking to expand their businesses and take advantage of changes which are shifting. Thank you very much for listening today. We'll be moving on to the next segment. I would like to introduce Kessa, my colleague.
Thank you, Lawrence. My name is Kessa Kim. I lead the Research and Consulting Department at CBRE Cambodia. Very pleasure today to present this section, particularly in the residential market. Moving on to the condominium sector, we'll begin by having a quick look at the phases of the new launches and new completions within Q3 of 2021. Within this quarter, we have seen 2 projects completion and 2 project launches. They are all in mid-range and high-end segment. This is a improvement considering within Q2 we saw no new launches and only 1 completion. Looking further into the supply aspects, this slide presents the overall supplies of condominium in Phnom Penh between 2017 and 22. In 2021, in particular, we have forecasted by the end of the year, we are seeing around 35,000 units of condominium to be completed. Out of the 7,900 units expected from the last quarter, we have seen that up to now only 36% have been completed. Just keep in mind that this has already been reduced from our forecast in the beginning of the year, which was 10,000 units, adjusted to around close to 8,000 units, and we are still expecting 64% other, which is accumulating to, I think, around 5,000 units to be completed. We are monitoring them very closely, and we think that we may expect to see some more delays in out of these 5,000 units and going into the end of the year. Looking into the average sale prices and rental rates in the condominium sector, it is no exception, and pretty much follow the commercial section when looking at the downward trends of all the prices, including sales and rental rate. In the sale prices, we have seen further reduction from previous quarter across all the grades. up to in between 1.8% to 3% across all grades. High-end condominium right now is looking at around 2,700 US dollar per square meter out of the net area. And for mid-range, we're looking at the price of around 2,300 for mid-range and around 1,300 for affordable segment. On the aspects of rental rate, we are seeing more dramatic changes with more deeper correction in between 5.6% to up to 7.8%. This is in particularly challenging for condominium rental rates, as they are now also competing with the supplies of service apartments in the market, and with the lack of momentum in some of take-up rates, as majority of the expatriate community is still overseas and haven't returned. Looking at the changing market and the reaction from landlords and developer, we are seeing that overseas sales are particularly challenging because of the restriction in travels, and we have heard a lot from a developer that this is not helping at all, and any virtual or virtual site visit or sales events that they are conducting, in particular help them to keep the names above name heard in the overseas market, but doesn't necessarily translate into sales. And what we are seeing right now is that a lot of condominium projects is shifting the focus into the local markets and fighting for the share of pie. And this, with the supply of a landed property coming up in the market, and the fact that most condominium are designed in particular for the overseas market from the beginning, it's very hard for them to capture enough attention, although we also notice an increasing attention from local market if you compare to the previous year, because as of now we're seeing price corrections and more favorable payment terms that somehow able to attract the attentions of local buyers. Further to this, this also leads to further repositionings and changing in handover conditions to fit the market affordability at the moment. So we have seen some projects been repositioning, for example, from high-end to mid-range, from mid-range to affordable, to fit in the price bracket that is reflective to the market demand. Handover condition has also been changed, as we see now the furnishings of some of the units, particularly selected by developer, has changed in order to help further with the sale prices, and also cope with to reduce construction costs on the developer side. Other than that, we also see that many developers looking for bulk purchasers or head lease operator to help mitigate the risk of cash flow issue, and also to take off the burden. And this is also an opportunity for some of the cash-rich buyers who are looking to purchase at a discounted price, or head lease operator who are interested to perhaps transform part of the condominium project into service apartment or other types of use, for example, condotel, as an example. Moving forward into another types of residential markets, which is landed property. This is my favorite sector, as always. Looking into the completions and launches as of Q3 2021, in the past 6 months, we have seen up to 22 new project launches and 3 new completion. This is a significant change, given that, in particularly in Q2, after the impact of the 20th February event, a lot of landed property has hold on their launches, although they've been in preparation along the time. But in particular in Q3, observing that the situation has been more stable, the pandemic somehow been controlled as compared to in the past quarter. a lot of developer has taken this opportunity to launch their projects. As a result, we're seeing up to 22 projects. We can't even fit all of them into this one slide, so we selected 4 out of them to present here. Most of them are in mid-range and high-end segment. Further into the supply aspects, we are looking at around 274 projects expected to be completed by the end of 2021. Among all of this, mid-range is taking the biggest share of the supply. However, when we look into the supply progress in terms of completion, out of 53 projects that we expected or forecasted to complete in the beginning of the year, only 24 has managed to complete the construction and hand it over the units to buyers so far. We are still waiting or expecting to see 34 other projects to be completed in the next 3 months. In our opinion, we think that some of this will manage to complete, but some others may not be able to complete it. The characteristic of construction delay has been quite expected in Cambodian market to some extent only. Naturally, a lot of developer has been quite ambitious in terms of construction timeline that they announced in the beginning of the project and end up having a slight delay. But most of the time, this delay range in between 6 to 9 months only for most projects. But we're probably seeing further delays in most of this project, basically due to the situation regarding the COVID-19 outbreak. Although we only have one nationwide lockdown during late April or early May, but since then we have seen a lot of on and off situation with the outbreak, and some of the construction site in particular has closed down within 2 to 3 weeks to cope with the outbreak inside their construction sites. So this has again arise on and put more pressure onto the construction progress, and the delays of construction material that we have seen across the sector so far has not helped either. With regard to sale prices, it's probably surprising for some people seeing that landed property has increased in price as compared to other subsectors in real estate. But actually, this is quite a expected reactions when we compared this to the previous performance in previous quarter, which was a drop by around 8 to 15% at that time. We are seeing a rebound in landed property prices in between 8 to 30% increase, which is making up for the previous 6-month drop. So this is comparable to the range that we saw in 2020. However, it is also worth noting that the price increase may also resulted from the new supply coming into the market, particularly the 22 project launches. Most of them are new launches in the new locations, and more excitement and also noticeable from the key developers, well-established one in the market that we already seeing doing very well in market. So this is also another factor pushing the price up in this quarter. In the aspects of changing market, we have seen that some fundamental aspects of landed property hasn't changed actually. On the developer or supply side, we're seeing that infrastructure remain a magnet for developer. So in Phnom Penh case in particular, new infrastructure such as Ring Road 3 and the construction of many 30-meter road, 15-meter roads in and around Phnom Penh has helped open up accessibility to new areas and have attract many new supplies into those areas. However, developer reputation due to track records and their experience in the market has remained a key confident factor for a purchaser. In particular, we have some of the names that are very established, coming into more than 10 years in the industry, such as Penh, Chimongland, and so on, still manage to gain enough tractions when they open new projects or new phases in their particular compound. However, in opposite, we're seeing that some of the new developer is struggling, especially when it is their first or second project and they're still trying to establish this reputation in the market. Another key aspect that we are seeing that haven't changed in the landed property is that appropriate phasing is still very important for many developers. This is actually the key to manage the cash flow and to be able to maintain substantial attentions from the buyers and attractions from buyers, in particularly when you open new phases and pricing it correctly. On the market demand side, purchasers are still prioritizing in terms of price and payment term when making decision on any purchase. Especially true within this situation where many of the income family has been impacted. However, people who are have kind of excess cash to be invested, still looking at landed property as a type of investment, leading us to the next and final point is a lot of local people still perceive landed property as a safe haven for their investment. I think this is particularly true across Southeast Asia as well. Land and landed property still remain top priority among the top priorities. Particularly for the Cambodian case, it's due to the lack of alternative investment options that are presenting or available for investor, and you have only very few options beside, for example, bank fixed deposit, gold. Other than that, stock market isn't really exciting for investor at the moment. So real estate, particularly land and landed property, is still at the top of their investment list. But whether this is will hold true, continuing when the market is becoming more saturated or more diverse in terms of supplies, we'll have to further observe and see. But an interesting observations that we had in the past 10 years of landed property sales, seen that early in the years, capital appreciation from landed property was very substantial, up to 30 to 40% in some cases. However, this has been decreased in the past few years. We only see that capital appreciation has slowed in some area, dropped down to probably 10 to 20% only, as opposed to 30 to 40% previously. So the questions on whether or not landed property is a safe haven for local investor, we'll have to continue observe. So this is the end of our presentations on key sectors in the Cambodia, particularly Phnom Penh real estate market. Thank you very much for your attention. We have now come to an end, but we will open for a question and answer in a few minutes. I just want to introduce you to a poll session, a quick poll session, as we already did in previous quarter. We always want to hear from you what you're seeing in the market. So you may agree or disagree with what we have presented so far. So please make your voice heard and let us know. The first question we are asking here is whether you have seen any improvement or deterioration in the business environment overall in the previous quarter. We start to see some answer kicking in now. On my screen now, I have a majority is slight improvement, which is somehow aligned with some of the subsectors that we are observing in Phnom Penh market. We're also seeing a lot of people choosing no change, slight deterioration, which is an opposite from slight improvement. But we'll keep it rolling. Second question we are asking, what do you think is the greatest threat to real estate in 2021? A lot of people have chosen oversupply and construction delay. I think we have discussed this quite a lot so far in our presentation. And the last questions are, what asset are you investing in 2021? Again, we're seeing a lot of people choosing land. Some people are looking at condominium and landed property. So basically residential and land. A few people are choosing bank deposit. Okay, and some people are choosing I'm going to sit on my money. Thank you. Thank you. I'll keep the poll rolling while we now start to accept questions from our audience. We got one question in particular addressing to myself. So first question is, may we know how is the infrastructure project in Cambodia? I think James has touched on this slightly in the overview section, although we only pick 3 major infrastructure that are being developed in Cambodia. We have seen that interestingly, the trends across infrastructure construction has not stopped or paused. A lot of projects still moving along. This includes many of the national road renovations or expansion. We're also seeing many projects, including airports and stadiums in various provinces continue to be constructed as well. So that's probably my quick answer to the question on infrastructure. Next questions is, what are your view on market development in major provinces compared to Phnom Penh? James, would you like to take on this question?
Yeah, sure. I'm happy to take on that question. Thank you, Kessa. I think it very much depends on what you're looking at and where you're looking. So really need to consider some of the drivers that are taking place in different provinces. Now, in some locations, particularly along the borders or on the coast, we are starting to see a lot more emphasis on industrial and logistics. But we're also seeing a movement in other provinces towards ecotourism, and that could be very much focused on a domestic market where international travel clearly is not as feasible, but we must consider as well the long-term opportunities available to that, bearing in mind that we all think international travel will come back to a certain extent at some point. Beyond that, I think as well, there is certainly demand for spreading and diversifying some of the economic growth that we see in Phnom Penh from the service industry, so particularly from banks, major insurance companies, even industries such as car and motorbike sales, as needing to diversify and grow their footprint and therefore spread out into other provinces, as well as options for improvements for residential projects in other provinces where rising incomes are starting to mean that people can move towards a higher level of lifestyle, and that can bring with it circular benefits into retail, as well as for those more service orientated businesses that I was discussing. So yeah, I think that the opportunities are there, and certainly when we look at Phnom Penh right now, for many, oversupply is the biggest risk, as you all identified in the poll, in the more traditional sectors. So I think we're going to see a diversification of where people are considering developing, and also what they're considering developing. So I wouldn't be surprised at all that we start to see much more emphasis placed on major provincial urban areas. However, I think everyone's got to be a little bit careful about that. These are centers with a much smaller population and smaller economy than Phnom Penh, and oversupply in those markets would have a bigger impact than would be possible here. So I think just act with caution, do your research, make sure you understand the market before you action anything in a provincial location. There are still opportunities definitely in Cambodia. There are several sectors that are undersupplied and several geographies that are undersupplied. Just because Phnom Penh itself is facing a few headaches in traditional sectors doesn't mean that there aren't other areas and other opportunities out there. So thank you for that, Kessa. I think we'll aim this next question, which is about the bore supply, to you, Kessa, because it's your favorite topic.
Thank you, James. I think we've got two questions on landed property. I think you can combine them together with regard to bore supply, and another questions on what our view on high-end supply again. So in particular, we're seeing that expansions in bore supply does tell us something. We also track actually the sales of most projects in the market, although the information may not as representative across the market because bore sales are very diverse. We see that many bore projects launched particularly in 2021 still managed to make enough noise and generate sales in particular, especially with the projects that are correctly priced and developers actually offering good products. When I say good product, it means that it reflects the lifestyle of the buyers and in the correct locations for that price point. We feel that, so in short, bore supply is still being taken up, although the rate of take up is not as fast as in the previous year. In particular to the high-end supply, we still see that most of the supply are coming from the reputative developer, established developer. And they are still managed to pull in enough buyers to complete the projects. I think the key interesting point on high-end bore is that the developer must know exactly what the niche market is and offer different products. So if you look at the offering in high-end market compared to mid-range and affordable, obviously amenity and community space is a key factor, but also including the designs, floor layout, size of units, construction quality, and again with the correct location, still manage to pull in enough buyers from the high-end segment. Many of them are buying to looking to occupy for themselves in the high-end market, but many also expecting to rent out those units, and some are still expecting to make a capital gain from their purchase. So that's my quick answer on landed property. Thank you. I think we've got another questions for the commercial segment. I think this sounds like a question for Lawrence, whether there's any master plan from the Cambodian government for Cambodia commercial projects in the next 10 years, and is there any of what are our view on the master plan aspects? Thank you.
Thanks for passing it over, Kessa. I think fundamentally, if there are plans for the urban planning of the city, they are not necessarily publicly available, which makes it very challenging for onlookers and stakeholders to see where the market is going completely, which potentially creates some challenges for developers and various stakeholders. There's a lot of value to knowing where the future is going and having some restrictions in place to development to maintain the status quo. So it's very difficult to say per se whether there's specific plans for the commercial segment, as it were. I realize that's potentially not the longest and most in-depth answer, but unfortunately this information is very limited in Cambodia.
Thank you, Lawrence. I'll take on the question regarding capital gains tax. I know that there are lots of queries about this one from many areas of the market. From what we think, capital gains tax in the long term is a positive thing for the market here. It professionalizes it and it brings it into line with what we would expect from a more developed market. So at some point, it's got to happen. Capital gains tax, yet, of course, everyone would prefer not to pay any additional tax, but the rate here is relatively affordable compared to some other markets. And like I say, it's just part and parcel of a more developed sector. So we aren't expecting any significant adjustment from it. I think adjustments in the market are much more likely to come from other areas, such as oversupply or absence of financing availability, rather than anything to do with capital gains tax at this time. Okay, and there is a question regarding Everground and its potential impact on the market. This is a huge story for Southeast Asia, and it's very relevant to Cambodia in particular, because some of the issues that have led to Everground's issue are also present here, in that supply is built without significant vision of who the end user demand is going to be. So I think that raises a few questions, and it probably will raise those from lenders themselves, who are likely to look at the situation that we see in China and then take a more cautious approach to Cambodia. Of course, luckily, to a certain extent, Evergrande is not present in this market, so we don't expect a direct impact. However, Evergrande is far from a unique story in the Chinese context at the current time, and it is possible that we will see another issue for a developer who is active here. Cash flow issues for Chinese developers are very common because at the moment, because they rely so heavily on domestic Chinese buyers to keep their turnover moving forward and grease the wheels of their operation. The Chinese government's clear stated aim and the purpose of the actions that they've rolled out is to limit as much of the capital outflow as possible, which means that these developers are either having to pivot their projects to other markets, which is particularly difficult for them when they've planned a project specifically to appeal to a Chinese audience. Therefore, they are having widespread difficulties, barring a few exceptions. So I think it's more that the issue has a possibility of a contagion effect, which impacts lenders, and then that has an impact on the rest of the market. Obviously, we wait to see how that transpires and what happens to that moving forward. So there is a question here, Kessa, regarding guaranteed rental returns. Do we think they will remain viable when occupancy rates of Port condos are at a low level?
Thank you, James. It was just a question I'm about to pick on. Very interesting discussion regard to GRR. We know that this has been introduced for the past several years, and has now also been introduced to commercial aspects on top of residential projects. What we have seen so far, in particularly regard to residential market for developer who has provided GRR to the purchaser, as the name suggests, it is a guaranteed return. So regardless of whether the developer are making profit or not, they are obligated to provide the rental return to buyers. With the current market, considering low occupancy rates in most condominium projects, we are seeing that the developer are now taking the loss for what they're paying out for the buyers in the previous years. Because it is still an early stage, so it's only a handful of projects has been completed construction, in terms of construction and handover and being operated under the TRR scheme. We have yet to understand whether the scheme will continue after their expire in the next, say, 2 to 3 years time after the project completion. But our take on this is that it's not likely to continue in some projects. In some projects, developer may consider to continue the TRR and looking for head list operator and turn it the whole project into, say, for example, service apartment or condo hotel to some in some projects. So this is what we are expecting to see with the situation regarding the TRR. I think I've seen two questions regarding the shopping mall. I think we can combine them together. One is what is our view on the rapid expansions on shopping mall and supermarket in Phnom Penh, and what are the recent opportunity, and whether you think we think there's an opportunity to expand for more development in other provinces. Over to you, Lawrence.
Thank you very much, Kessa. I think there are two key elements to this question. Fundamentally, we're going to look at things from a landlord's perspective and then also from a consumer's perspective. From a landlord's perspective, there are going to be a lot of challenges as competition increases. This is potentially going to impact their rental rates, and it's going to impact occupancy rates, as we discussed earlier on. So as the market continues to increase and become more and more competitive, it's going to get harder and harder as a landlord, but also potentially as a supermarket operator or a retailer. From the other side of things, from the retailer's perspective, there may be some benefits as the space improves and rental rates decrease. And as mentioned earlier on in the presentation, this is probably going to benefit retailers. Fundamentally, this is also going to benefit consumers. Competition is great for consumers. It means that supermarkets, it means retailers have to up their game fundamentally, and that opportunity gets passed on to the market. That means that we're going to see improved supermarkets. That means we're going to see improved F&B experiences. That means we're going to see improved retail overall. So fundamentally, that is going to benefit the market.
Thank you, Lawrence. We are very much approaching a time where we have got to wrap this up. So what I will do is we'll just direct some very quick fire questions to Lawrence and Kessa, and I'll take on a few myself so we can get through as many of them as we can. So Kessa, what is your recommended investment in the current situation in 2 words?
Maybe 1 word, land. I think in the current situations, land still perceived as a safe investment, and with the improvement infrastructures opening up accessibility to new areas, this has particularly beneficial for land investor. But other sector also have its potential. So, but this is my quick question.
Slightly more than 2 words, but thank you. Okay, the elections in 2023, do we think this is going to have an impact on the market? Traditionally, elections have impacted the Cambodian market, generally reduces activity levels. Do we expect that to happen this time? Yeah, I think it just gives people a little bit of distraction, a little bit of uncertainty to a certain extent. However, the political stability that we've got here at the current time probably negates that compared to previous years. So I would expect that other impacts will have a bigger adjustment on the market. I'm not going to say that we're going to think 2022 is going to be an easy year anyway. So it may be difficult to discern how much impact the elections actually have on their own. Okay, Lawrence, have we been observing any late payments of customers to developers due to disruption to their income?
I would say that there definitely has been some impact in terms of payments. It's inevitable that as the market has experienced significant challenges over the past year or so, this sort of activity or these sort of defaults are expected to happen. There was a World Bank survey done in Q4 last year, which indicated around 50% of Cambodia's population did experience a decrease in income that was due to COVID. So that sort of side of things is expected. However, we're not seeing that on a widespread basis. So things are still relatively stable.
Thank you very much. There's a lot of questions about Everground. I hope that we've given you an answer on those. We did flash up an article earlier from the Diplomat, which dealt with a few of the aspects of Everground's impacts on the Cambodian market, or potential impacts on the Cambodian market. I'd recommend it. It's a good article. Not at all because I'm in it, but it covers quite a lot of the ground that we're talking about today. So yeah, I think there certainly is an impact. It raises some serious questions about sustainability of particularly condominium development. But equally, I think there is a toss-up there in terms of the answer of how to go about thinking of the potential impacts. You can either look at Cambodia's market as still being relatively small, and therefore a positive trend can have a major positive impact, but equally you can look at it in the other way, in that an impact on our availability of lending could have a very significant impact on a broad range of developers who maybe don't have the depth of resources available to continue on financing their project without the traditional sorts of lending. So I think that probably is summing up as much as we can get through today. So I want to thank you all very much for joining, and thank you to Kessa and Lawrence for their inputs, as well as the rest of the team here at CBRE for their inputs putting this deck together. This will be available on our website as a PDF, and we will also upload this webinar onto YouTube in case you want to revisit any of the points that we've discussed today. So thank you again, and we look forward to seeing you all in the not too distant future with some more events that we'll be hosting. And we hope very much to see you all in person as well as restrictions start to ease, which I think we all will find very much to our liking. So thank you very much, and look forward to speaking with you again.